Does this new rule go far enough to address those concerns, or will the SEC, should the SEC, or will the SEC do more to address that?
Well, what we did today is one part of a set of reforms that we're looking at, but an important part of it because it has to do with lowering risk in the system in the U.S. Treasury markets. And to your question, there is a lot of borrowing leverage in the Treasury markets. Bringing things into central clearing can address that in a number of ways. One is the clearing itself does something called multi-party netting, which lowers a lot of risk in the system. But secondly, clearinghouses collect margin. They collect collateral against transactions. And right now, a lot of the markets is operating and is not collecting collateral or margin.
So, like the ICBC hack we saw just recently, which was disruptive to the Treasury markets in some ways, would what just passed today help avoid that in the future? Is it a step toward avoiding that, or do you still see situations like that could arise?
I think there's some relation, but that's a separate risk. And we have to be very aware there are risks in our systems from cyber attacks. In that circumstance, as publicly revealed, it was a ransomware attack. And that ransomware attack disrupted a Treasury clearing broker-dealer. And so the clearinghouse operated smoothly through that. But for that one clearing broker and its customers, they had to quickly find workarounds.
Commissioner Ueda, during the meeting today, to paraphrase his words, essentially suggested we can't pretend this rule is going to solve all the systemic risk present in this market. He mentioned specifically higher interest rates, especially as the Federal Reserve is about to make yet another rate decision today. How concerned are you about higher for longer rates and the potential vulnerabilities it causes in Treasuries?
Well, you'll be glad to hear that I'm going to leave interest rate policy to Chair Powell and his fellow members of the Federal Reserve. But in terms of the U.S. Treasury market, we have seen greater volatility. In fact, we've seen volatility in the markets this year, which are historic. Earlier, around the regional banking turmoil at the beginning of the year, more recently even in the longer end of the curve. And so it's really important to look at the leverage in this system. And there's a lot in the relationship between, on the one hand, banks and broker-dealers, and on the other hand, hedge funds. And that borrowing in the marketplace is part of what this rule today will address, at least bringing the benefits of central clearing that helps lower risk.
Well, on the subject of hedge funds, separate news came yesterday when a group of trade groups for hedge funds, including the Managed Funds Association, filed suit regarding to rules the SEC already passed earlier this fall related to short selling and related securities lending. I know you can't comment on a specific lawsuit, but when you think about them collectively, the idea that Wall Street seems to be just taking every rule you pass and taking it specifically to the Fifth Circuit Court of Appeals, how does that make you feel? How does that maybe change how you're thinking?
It's part of democracy, and they have their rights to do that. I feel very confident in the work that the team has put together, the commission reviewed, it went out to thorough public comment. And I would note that these are two rules to promote greater transparency in our market, as mandated by Congress after the financial crisis of 2008. Congress mandated that we adopt rules around what's called securities lending and separately around short selling in the markets. And that's what we did based upon public feedback. And I'm very confident in our team's work.
But more broadly, beyond just those two rules, when you look at the real litany of court cases the SEC is now grappling with, are you worried that Wall Street is going to continue using the courts to dismantle the work of this regulatory body?
Again, this is not a new feature of our democracy, and
it's happening frequently, though.
It's happened in the past as well. So we put together all that we do according to the legal authorities Congress has given us and how courts interpret those authorities. We do it based on public comment, and we do it based upon economic analysis. And again, I feel very proud of this agency and the hardworking staff and my fellow commissioners.
On the subject of Congress, obviously we're about to head into an election year. There is a chance that come 2025, Republicans can control both chambers of Congress, potentially the White House as well. Does that set a kind of deadline on the work you are doing here, knowing that theoretically within a certain number of legislative days, Congress could have the power to overturn some of your rulemakings? How are you thinking about timeline?
I think of it this way. We have a privilege of service. Somebody like myself, a privilege to service, and it's about doing the maximum good for the maximum number of people. Our clients, so to speak, are 330 million Americans in the time that we have in these jobs. That's what I'm focused on.
And obviously, the commission and the staff of the commission is still hard at work on a number of issues, one of them dealing with a number of filings of spot Bitcoin ETFs. You know, Mr. Chair, I have to ask you this question. There has been a lot.
I suspected we did something very significant about the $26 trillion Treasury market, which is really the base of our entire capital markets. It's how we fund our government. It's how our Federal Reserve does monetary policy. It's how we maintain the dollar dominance around the globe. And you want to ask me about crypto?
In my defense, Commissioner Ueda also brought up crypto in this open meeting.
Priorities? I mean, the U.S. Treasury market is a very consequential, very important market. Crypto securities are not only much smaller, it's not how we fund our government, it's not how we conduct monetary policy, and for many investors, they've been harmed in that market. And they're being harmed because there's too much non-compliance. And it's not just non-compliance with securities laws, it's non-compliance with a raft of other laws. Our sister regulator in the market space, the Commodity Futures Trading Commission, the U.S. Department of Treasury, and Financial Crimes Enforcement. But again, I do ask, and if you look at the focus and the priorities, the U.S. Treasury market and what we did today is really quite important to our capital markets.
Absolutely, and that's why we have discussed it, but you are actively engaging with a number of matters related to crypto specifically. So I think, sir, this is fair game, especially when you are having staff meeting with a number of issuers in recent days.
Fair game. I'm glad that you at least now agree that the priorities were more to the Treasury market. So what is your question about Bitcoin?
We have seen in recent days SEC staff engaging with issuers, of a number of which have filed for spot ETFs. We've seen a number of amendments to those filings. It seems that market participants in crypto have a sense that we are reaching the end stages here. Typically, is this kind of engagement with the SEC not prejudging anyone filing, but the level of engagement we are seeing signifying of things getting easier, closer to resolving, or things getting more difficult?
Again, we have, I think, somewhere between 8 and a dozen filings in front of this agency with regard to exchange-traded products around Bitcoin. And the staff of the various divisions respond when market participants have filings. We also had a court case earlier this fall in this regard, and so we do things according to our authorities and how courts interpret our authorities, and that's what we'll do here as well.
I think you're referring there to the Grayscale case. Just one final question related to courts. As we talked about a number of litigation the SEC is already dealing with, there has been a lot of talk about one of your other proposed rules changes related to climate disclosures and Scope 3 being included, potentially unleashing another huge wave of litigation. How is that informing the SEC's thinking as it considers that final rule and what it looks like?
Well, we have right now in our capital markets not just hundreds, but probably over 1,000 companies today that are already making climate risk disclosures to investors. We have investors representing tens of trillions of dollars of assets under management making investment decisions based on those disclosures. So we put out a proposal about 20 months ago with regard to climate risk disclosures. We got lots of comments, 16,000 comments. So we're still sorting through that. But again, just as I said earlier, we will, if we go forward because I can't prejudge anything. We will do it based on the law and how courts interpret our authorities.